Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this sheet in front of you is a review of the audited financial statements. So it takes the 40, 50, 60 page audit and summarizes it into 4 pages, and it's consistent from school to school from our perspective. So this is a good tool to communicate between myself and others in the office, and now we're bringing it to you via video, so we hope you get some benefit from this. Also, we use this in our renewal process. This is how we compare schools, so it's important to know what we have and make sure everyone's on the same page. So with that, we'll start. First, we'll start here, the statement of net position. These numbers are all derived directly from the audit. I'll show you where they're at. So as an example, we'll look at total assets of $2,127,565. So we'll go to the audit. Here's the statement of net position up here in the title. And then here's our assets. Here's our total assets of $2,127,565. So you could match up the rest of the numbers if you want. For time, we won't do that now. But as we move down, you'll see the ending net position. So the ending net position is the June 30th, 2014 net position. Below that is previous net position. That is June 30th, 2013. So this is a means of comparing the two. And as you'll notice, the net position actually decreased from the last audit period. So moving down into the balance sheet area, this shows all the current assets and what they're classified as. Over here we have our balance sheet information for the general fund. Shows the fund classifications, and we'll go to the audit for a moment. So if you're looking for that information, it's 2 pages after the statement of net position. So 1, 2. Here's the balance sheet. Again, we're looking in the general fund. Now, when we look in our office, we do look at these other funds, and it's important to look at these other funds. But for this part of the sheet, we're only looking in this column, so it's important to know that. So here's our cash and such up here. The fund classifications are located at the bottom here. So you'll see non-spendable and then unassigned. So going back to our sheet, again, you can look at the cash and such over here, and then the classifications are over here. So there's actually a negative unassigned amount. So unassigned is amounts that are available for any purpose. These amounts are reported only in the general fund. So these would be what you can use on essentially whatever expenditure you need to. So down here, non-spendable, if you notice on the audit it said prepaids, but I'll read it to you anyway. It says amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So if you notice, this is $374,000. Here's prepaids of $374,000. You can't spend what you've already spent. So that's what that is. Moving up, we'll see the general fund general fund breakdown. This shows the activity for the year in really a summarized form. So here's the beginning fund balance, the revenues, expenditures, other financing sources, net change, and then the ending general fund balance. So there is a really large net change during this year, and this is broken out into detail on page 2, so we'll get into that down there. So, but there's a very large net change, negative net change. So below that, though, before we move down, these are a couple percentages. This one is general fund divided by revenues. So this takes the ending general fund, divides it by revenues, and then so this is an indicator you can look at from year to year to see how you're doing. Is that trending upwards or down? This is the same calculation essentially, except if there was a restricted amount down here, it would subtract that before making that calculation. So it's the same because there's no restricted amount. Excuse me. General fund divided by expenditures, the same thing. It just takes the general fund, ending general fund, divides by expenditures. This can be somewhat misleading because if you have a big capital outlay like you do during this year, it's potentially skews that number. So that's why we do both of these, and then we try to figure out what's going on. These are just indicators, not absolutes. So, and then we have our ending general fund divided by beginning general fund. That just divides this by this. If this is below 100%, there was a decrease. If it is above 100%, there was an increase. So this is well below 100%. So that's why we've already stated that there was a big decrease. So as we move down, we'll get to this area. These 4 boxes are a summary of the notes section of the audit, and also those notes are included on page 4 of this sheet. So just so you know, so notes payable, that's the state aid note information, or short-term borrowing, but I believe it is state aid note for Frontier. Very few schools use actual short-term borrowing outside of the state. So long-term debt would be associated with any type of bond or capital debt, long-term debt. So essentially, then we have capital operating lease. This is the building lease for the school. This is again down in the information's down in page 4. And then here's the management information. This is directly from the audit. So yeah, this is the management company area. And then this was the bus thing. I did recall reading that. This was your bus information. So as we move down here, we'll see that there's a couple percentages. Don't confuse this with the management agreement percentage. This is a calculation that takes the total management fees and then divides it by the total state aid. It's just trying to make a percentage basically to compare from school to school. Earned takes the management fee, divides it by the fall 2013 count. That's the corresponding count for this fiscal year. So that's just another comparison. Down here we have 30,000 square feet. If this is inaccurate, let us know. Some schools switch buildings. I believe Frontier did, so I'd like to make sure that that's accurate. If it's not, we can just quickly update it and it will change these calculations down here. So this over here takes the revenues, divides it by the square footage. This takes the expenditures, divides by the total square footage. This is the difference between the two. This is negative because of the big drop and the big negative net change. That's why this is negative. So payment per square foot takes the lease payment amount up here of $313,000 and then divides that by the square footage, and that's what that number is. Over here we have operations and maintenance per square foot. This number takes the operations and maintenance line item down here and then divides that by the total square footage, and then this takes the square footage and divides it by that fall count. So that fall 2013 count. So that's what all those numbers are, how they're calculated. As we move down into the general fund comparison, this lets you see the previous 2 audit periods side by side. So you have June 30th, 2014, June 30th, 2013, and then here's the difference. So you'll notice that the state aid went up significantly. So these are the type of comparisons you can make from this sheet. Again, this column is a summary of that upper right-hand corner of page 1. So this is the detailed breakdown. So as we move down, if you notice these codes here, these are accounting codes. That's how you differentiate between what these different things are. So as an example, I'll show you if you ever want to know what one of these are, if you don't understand what one of them are, what's encompassed in that line item. I took the accounting manual, put it into Microsoft Word. You come up here, you push find, and then you type in what you want. So we're using basic programs as an example. Then you can actually move through this document and it will show you everything. So here's the code number. And then here's where it says basic programs are instructional activities including enrichment, designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps, and it includes pre-K. So that's just another tool to find things out. So if you don't understand anything on here, if you don't know what something is, we can get you the answer. It's important that you know what's going on. As we move down, there's a couple things that come to sight here. Are the operations and maintenance. If you look, that increased pretty dramatically from year to year. Pat Victor's been in discussion with myself about things going on with the boiler, and I believe a bunch of windows are upgraded. So we do keep track of that, but it's important that we're all on the same page and know what's going on. And then here's that capital outlay of $698,000. Then last year it was $79,000. So it's important to be in discussion about that stuff and what's going on. So so this is a good tool for the board to be able to compare from year to year, to look at the change and then say what happened, what's going on, and then plan. Because the fund balance was down to $43,375 at June 30th, 2014. So As we move down to this area, this is the budgetary comparison area. This takes the budgets from the audit. This is from the audit again. Takes the original, shows the original budget, the final budget, and then the actual. This little note, I don't think it shows up on your sheet, but it's just there to just say, oh, the original budget is due July 1, which is well before the count date information, which is why there's sometimes a vast change from the original to the final budget. So that's kind of a note for us, but it's important to know that. And I don't think it's on your sheet, but hopefully everyone knows that. And then this takes the budget difference between the actual and the final. And then this is just a percent change, so it's actually a very small change between the final and the actual, but there was a large negative actual final. So as we move down here, these calculations take the total instruction cost divided by total revenue. So I'll show you what that is. Here's the total instruction, and then here's the total revenue. So it divides those and then puts it into percentage, and then that's calculated for 3 years to show a trend. Not absolute again, but it's an indicator to ask questions. You know, why is this going up or down? If we looked up, so let's look here. You would say that this is a drop of 5%. But if you come back up here, you'll notice that the expenditures didn't actually decrease. The revenues just increased at a faster pace than the instruction expenditures did. So it's not meant to be absolute, but it's hopefully thought-provoking to help ask questions about the right thing. So revenues divided by fall 2013 takes the total revenues and divides it by that fall count. And then expenditures, same thing. Again, this is going to be up pretty high because of that capital outlay up here. So that's kind of skewing all the expenditure numbers, just so you know. And then the difference is negative because of that expenditure number is really high. As you move into the next page, this is the enrollment data. So these numbers are derived from CEPI, which there's so many there's so many acronyms in education that I'll explain what CEPI is. So we'll go back to my browser here. CEPI is the Center for Educational Performance and Information. So they have a lot of good data. They store all the count data and that kind of thing. So if you're looking for count data, you come to My School Data. You do go through some filters, and then here's all these Excel spreadsheets where all this data is. Also, here's where the free and reduced lunch counts are. So that's where this data is derived from. I won't make you dig through those big spreadsheets. I did it for you. So that's what this is. If you notice, I didn't highlight the last one. The last one is actually the unaudited number I received via Epicenter with the DS4061. So that number may change depending on if the audited number is different from that. So just so you know, if there's comparison from year to year, that number may change. So these numbers over here are a numeric way of showing the change from spring to fall, fall to spring. So this shows the percent change. For numbers people, if you're a visual person, you have the graph below that to show the trend down here. So a lot of our schools do drop from fall to spring, just so the board knows that. So that's pretty common, but enrollment's been pretty steady and kind of trending upward. So that's good. As I move down, this is the free and reduced lunch count. All of these are from CEPI. Again, just filtering that search criteria on the site. And then over here again we have this is not the percent change, this is the percent free and reduced lunch. So this takes the free and reduced lunch count and then divides it by the total fall count, and that's where these numbers are derived from. So 99, 100, 100, 100. So again, these are rounded. So here's the visual display down here if you're interested in that. And then below that we move into page 4. This is the informational piece. Again, this is all from the audit. These are not my words. I believe all of this is from the audit. So, and then there's page numbers. So if you wanted to go look this up, it's on the lease about the building, page 23. Long-term debt about the buses. It was buses. That's page 23. State aid note information, page 24. So you can read all this, and again, that's summarized in those 4 boxes on the first page. So there's the boxes, and then if you want to know what those boxes entail, come down to this section. This will tell you what's going on in more detail. So that's the debt information. This is the management company. So this will provide all the detail from the audit relating to the management company. So there's prepaid management expenditures. We went through that. There's those non-spendable amount, and then one thing that we may follow up on in a letter or something to the school is the total fee expense for June 30th, 2014 was approximately $390,000. As of June 30th, 2014, the Academy owed the related party approximately $330,000 in fees and approximately $681 in other expenses. So that's kind of an indicator that something's potentially awry at the school. So we may do a follow-up. Again, before we do that, we'll look at the budget and the quarterly and stuff, but we may be in communication about that. So this is meant to be a training, not to be about that. So, but just to be aware of that. There was no findings, which is good. And then on page 16 it states that the charter contract was extended through June 30th, 2017. So with that, my contact information is down here, albertb@bmcc.edu. If you have any questions, feel free to ask, or Pat is available to answer any questions or help steer you towards the right answer. Hopefully some of these things I showed you, like the accounting manual and stuff, can be used. And I hope you enjoyed the video. Have a good one. Thanks for all you do for the kids in Michigan. Take care. Bye.